Are we in a recession? Some economists would say yes, we are in a recession. The US economy has shrunk over the past 2 consecutive quarters, which is a good indicator that we are going into a recession. Now, others see it differently. They point to certain indicators that suggest we're not quite into a recession yet, but no one can deny it has been a bear market as of lately. Things are certainly going down. Take stocks, for example. The S&P 500 is down 11% year to date. The Dow is down 8%, and the Nasdaq is down an astounding 17% since the beginning of the year. And although we just came out of a recently booming real estate economy, things are starting to slow down and there are talks about a drop in housing prices. We're seeing extraordinary amounts of inflation, nearing up to 10% for the year, meaning our money is about to become a lot less valuable. So if you're anything like me, you want to know, how should I best invest in a down market like this so that I can come out on top no matter what happens? Now, I can't tell you how to invest. I'm not a financial advisor, but here's my plan going forward. The first thing that I'm doing is I'm consistently investing in index funds. If you don't know what an index fund is, it's basically pooling together a bunch of different companies and putting them into one large umbrella or bucket or however you want to say it. So it's considered a little more safer and stable than an individual stock. Another alternative to index funds is what's called ETFs. They're very, very similar. In the past, my main investing efforts have been focused on what's called leveraged ETFs, meaning that they trade at 2 or 3 times the normal daily volume, so they're more volatile, a little more risky, but they have a lot more upside. Now, I love leveraged ETFs, and they did great for me during the bullish market. But as it turns into a bear market, I'm going to start leaning more and more on just regular ETFs, regular index funds, so I can find a little more stability as things get a little crazy. If you're looking to invest yourself into index or ETF funds, then I would suggest looking at sectors that are going to be considered the basics. I'm talking about housing and healthcare and all the things that people need to rely on no matter how much money is coming into their account. They're going to be avoiding luxuries that they would regularly spend money on and put attention to during a booming economy. Now, the second thing that I'm doing is I'm diversifying my portfolio. Up until now, I've mostly been into stocks and I've had a lot of great success there. But as we've seen just this year, a lot of volatility. And well, the market on average is down like 12 or 13%. So that inspired me to look elsewhere to see what other ways I could capture profits when other things are going down in the market. One investment vehicle that has caught my attention recently is what's called a REIT or an REIT. These are a lot like index funds in that you can invest in a pool of other companies or stocks and capture a share of that market. Now, in this case, we're talking about real estate. What you're actually investing in is a pool of properties owned by a company or a trust. So you share on the profit and the appreciation, and of course you also share when there's a loss. Now, I wanted to invest in REITs myself, so I've done a lot of research, and it kind of shocked me. Since the 1970s, REITs have actually outperformed the stock market. Historically, they're actually less volatile and more profitable. And what's awesome about REITs is it's not just residential. We all know that the real estate market for residential is kind of iffy right now. But what about commercial? What about industrial? Have you ever heard of self-storage REITs? Likely not, but they're doing exceedingly well, averaging 17% per year. So yeah, I like REITs, and I'm looking to allocate a higher proportion of my investable income towards them. But that's just one of many investment vehicles if you're looking to diversify your portfolio, which in a recession, you absolutely should. The third and final thing that I'm doing is I'm keeping my liquid cash at a bare minimum. We've talked about inflation already, 10% for the year. That means that your money that is sitting liquid in a bank account or under your mattress is going to lose 10% of its value by the end of 2022. So if you have $10,000, it becomes $9,000 in purchasing power. If you have $100,000, it becomes $90,000. So it becomes clear that you're going to lose a decent chunk of your money if it is not invested. Now the thing about recessions are, they come with more than just inflation. You see more foreclosures, people lose their jobs, businesses close down. So you definitely do want to have some liquid cash in case there is a rainy day, because chances are there's going to be one. So your bare minimum may be 3 to 6 months of expenses, a little on top of that and nothing else. The idea is to not leave a huge chunk of your portfolio sitting on the table for inflation to grab it. This is also a great time to explore investment vehicles that keep your money semi-liquid. Now, when I say semi-liquid, I mean you should leave your money in it and watch it grow, but if you need it, you can get it. Two great options that I would recommend is a money market account and a Roth IRA. A money market account is like a savings account, but you can get up to 1 or 2% interest depending on the bank you keep it with. So it's not beating inflation, but it's better than just keeping it in a regular savings account. Now, the reason I like my Roth is because I know I can withdraw my contributions at any time without any penalty, and I can leave any gains that I have inside of it to keep growing. If you do more research, I'm sure there's a whole laundry list of investment vehicles that can keep your money semi-liquid, grow for you in the meantime, but be there for you when you need it. So whatever it looks like for you, make sure you're keeping cash at a bare minimum. So yeah, things are down, and we may be heading into a recession. In fact, we may already be in one. But if you invest wisely, there's no need to panic. Here's the thing about recessions. They suck, they wipe a lot of people out, but they also create a lot of opportunity for people like me and you to get ahead. So stay consistent, pivot as needed, and get ready. It's going to be interesting. Well, I hope you liked today's video. If you found value in the content, leave a like down below. Your support and feedback is invaluable to me. If you haven't subscribed already, then what are you doing? I'm here every single Friday. I'm gonna help you optimize your wealth. I'm gonna help you maximize your life. Let's build wealth together and love the life that we're building. All right, I will see you guys next Friday. Thanks for watching.